Welcome to Insights. I'm Eric. Thanks for stopping by. We're going to do a US dollar review today, short one on that one. We normally talk about the dollar in terms of the report because it's such an important market, and we'll continue to do that. If you're not participating in that report, I would do so. The dollar index is it's really a fulcrum of everything that's taking place in the world. Debt, people try and say the solution will either be Bitcoin or gold. But really, the driver to a lot of this is taking place in the dollar, so you have to watch this carefully. And we talk about it in terms of not only UUP, which is the dollar index that we track, but also the individual currencies around the world too. You're seeing a lot of damage that's taking place. A lot of people are complaining on the internet about how things are not that great, inflation, but no one's really talking about the yen. No one's talking about the euro. This is still relatively contained in a world that we see today. Contained means it's pretty palatable. When it gets uncontained, markets will shut down, accounts will lock out, things will happen with lightning speed, and it'll keep you with your mouth open. We're going to have to talk more about that stuff in the future. We're going to have to relegate that to the report section, and I encourage everyone to join that. Otherwise, try and act. I wouldn't say try and act surprised. You will be surprised by what comes. Prepared would be another thing, and that's what we're trying to establish. In terms of the dollar index, why are we talking about it today? The three composite time frames are all here: daily, weekly, monthly. They were all up. The dailies come down, so now we have a breakout down. The market's in consolidation. It's in consolidation within an energy build that's not too interesting, but it has a couple unique quirks. Energy is usually opposing the directional build. We'll talk that towards that last. The dollar index rally, which started over here, it's 14 months ago and 18%, pretty sizable return. It started on a pretty sizable negative energy build, and that's what usually happens during a crisis or a building crisis, as they try and slow this by control. It's not, you would expect normally a bullish energy build, and we'll see how large it is relative when we look at the major currencies DI, which is lower. We talk about that more in the report. But this energy build is not bullish, which means it's not setting up to slow the rally down. A rally then, if you look at the sticks here, we'll slide up. You can see it's another double top. We've seen it before. Everybody calls out, sees the double top, and says the top is in. And then about 2 weeks later, the invisible hand proves them wrong again, and then they're caught wondering what the hell's going on. But hey, you had a sell-off, the gap, a little bit of a gap, not very strong volume. Nothing goes straight up, and that's the lesson that you want to learn. Now, if you want to short this, because the daily tertiary trend is down, you can do whatever you want. Doing so against the primary trend is generally what they call suicide in this business. You want to do that, then just be aware of what you're doing. Primary trend is still up. It's not exceptionally old, which means that this box is not very wide. It's a green box. You can see these dynamics of the primary trend over here. They're marked here with the price and time cycles. They're red, but they're not bolded, and they're not above 2. And the time cycle at 14 is still 0, which means this is a fairly early trend. Time drives everything, so this is not a very wide box, which then, by extension, the dollar index, which is largely comprised of the euro, is not a very wide box down or unshaded region. The euro tends to do exceptionally poor when you're in a non-green shaded region, and it can actually accelerate, but that's something that nobody's really talking about. The euro, they can catch it a little bit, or they can try and do some interventions. I expect capital controls are coming in Japan. They're probably coming in Europe. There's all sorts of things. Each one of them represents a guidepost that says things are getting worse. You should keep an eye on that stuff. But we'll talk about it when it does come. Doesn't mean things are better, and I certainly doubt that the dollar's topped out because of anything that we've seen yet. The dollar will be challenged, but you have to bury everything else first, and I don't see anything buried. The conversation talks about beating, but buried is another conversation that's completely different than down. Down 30% and completely non-functional, those are different. So the reversals on the dollar index, it's all bullish. They're above them. Everything's green. If you looked at the euro, there's mostly everything's red. I don't know how you can be bullish on the euro, but I'm sure people are. just tried to dissuade you from all that stuff. What we're trying to do is talk about this in terms of the invisible hand. The invisible hand does not have opinion. It does not have judgments. I am not interjecting mine. I am interpreting what I see in the matrix and just talking about it in a way that everyone else who has, and that's not the same level of skill of reading the matrix, can see. Well, that's how we see the world, and it can help guide your future assessment. When if you subscribe to the matrix and you pull this on a daily basis, at least you can understand what's taking place in the dollar. And if you don't think the dollar is related to energy markets, it's related to the commodity markets, related to gold and silver, well, you haven't watched markets too long. They're all interconnected. And if panic really comes, the dollar will rally up, and it will cause major concerns in the other markets. And when I say other markets, it's mostly the larger periphery currencies. They get challenged, they will be buried into non-existence, and that where they have to make them disappear. That introduces the concept of either bail-ins or bailouts, or bank runs, or the next wave of the new flavor of the day is digital currencies coming from central banks, which that's another conversation. It's too detailed for this, but this is all tied into that. Now, as the dollar has rallied, and then we've come back a bit here, how do we know if there's the proper energy build? You normally look here. This rally started on a negative energy build. It's going to stop on a bullish energy build. We usually talk about this in the report section as the major currencies. It started on a negative energy build. It's going to end on a positive energy build. But we're falling back down to a negative energy build. This thing's fueling up for a continued rally. It's just the computer is not going to allow us to enter this until we get a reset, and you're just going to have to deal with that. Is the reset going to be early and it's going to be favorable and easy? Probably not, because the dollar index has been up for 14 months already, and a lot of people sold out of it and said, well, everything's going back to normal. Why do I need to worry about this? Well, this is the dollar rally is going to break the world. And that's right now, that's what you say, and that's your belief, and you'll just have to wait. If you believe it's just a belief structure, and that the debt system, which I've shown this chart so many times, I'll just throw it up one more time if I can find it quickly. If you can't find, well, I think it's in the quarterly. If you can't see this or haven't seen this, which you do, and you can't see the damage that's being done into the world, as the world rallied up and then we fell into the depression, the liquidation of the debt burden, which the debt exceeded 300% in the Great Depression. I'm not talking recession, all that BS that's out there. The Great Recession, it was 381%, so we're above that. We're 367. Well, we were above that, but we're 367. We're well above the liquidation point. If we do get what we did in the Depression, which they will, I mean, at some point this debt burden will liquidate because the music will stop. Then eventually the debt fizzles and they default. And how do they default? They will default through devaluation. It's the whole point of digital central banks or current digital currencies issued by central banks. This comes into the question of whether Bitcoin will be around or will be involved with the game. We talk about that in the Bitcoin report. Nobody cares about Bitcoin anymore because it's not going up, 1,000 points a day. But again, I'm not sure it's completely lost its utility yet. I doubt it survives, but these are all conversations that we have there. If we start the Bitcoin report again, you can join that one and learn more about it. This doesn't want to be a rambling, and try and keep these things at 10 minutes. That's about the extent of which people will pay attention long enough and not tune out. So, and I don't want to irritate and waste people's time either. So the dollar index has come down. It's in a pause and into a consolidation. Energy build reflects more of an energy of continuation because it's curling over. The energy build and the rally started was negative. Energy build was negative in the rally. It's curling over to negative again. That favors more of continuation. So it's really only a matter of time before we get a reset on this one. I wouldn't anticipate it just because it's only a matter of time. You're going to have to wait for this R in the column, and then we reset. It means higher dollar, lower euro, lower pound, lower everything, and you have to be prepared for that. If you have any comments or questions, come ask us, or if not, come join some of these reports to learn more about what's taking place. The world's about ready to change, and when I say it's about ready to change, you're talking about at least 8 to 10 years. That's a fairly sizable time frame, but it's done. We're done nickel and diming these conversations. If you want to like buy some of the CNBC arguments and all that BS, go ahead. I mean, the world is far different, and this isn't a chance to talk about this before you get caught standing with the majority at the wrong time, going, I don't know what to do, and I should have done something. And that's going to really be laid out by the direction of the dollar. And the euro is driving a lot of it, so is the yen. We had talked about it in this before. We thought the euro was going to go first and the yen would follow, but it could be either one. But it is the direction of the dollar that's breaking the world, and it's breaking a world that's defined and flooded with debt. When this rolls over, it's going to be lights out. When the lights out come, if you think you're going to be able to protect yourself and do all the things at that point, good luck to you, because you have to be prepared for before these events unfold. It is a crapshoot. It doesn't mean that, and some of the things that are going to come and change are going to probably be the way people treat one another, interact with one another. Everyone is in the same boat. It doesn't matter what your bloody politics are. I get sick of it. I'm sick of a lot of the conversations that are taking place. I'm sure I'm going to get sick of it more. We're all in the same boat, and if you don't realize this, when this liquidates, you're going to lose a lot more than you think you are, because it doesn't matter if you don't share the same interests as someone. The rights of those interests and the rights of those people are always the same. Do what you want, follow laws and rules and stuff, but let people decide for themselves. Then those are all going to have to come up into question. When you stand within the same realm of what you believe in terms of that, then the financial markets may react to it in a way that says, hey, confidence is no longer collapsing. It's one of the reasons why you see this sharp run up in the dollar. It has to do with confidence as well. I don't want to address that here, but we talk about it in other places. The dollar report we talk about in the economy and stock reports, they're all important. This can't be translated into the markets that you only follow. Thanks for watching, and thanks for participating today, and I hope you guys have a good trading day.